Hey, there's a bubble.
How do you know?
Trust me, call Venet. Buy 50 million in swaps on the MBS. What do we got? Garibaldi 4 triple T.
Mark, you sure?
Yeah, it's time to call bullshit.
Holy crap. ARM is up about 30% after reporting earnings. At one point, they were up 40%. This is sending Nvidia stock up another 1.24% as well in after hours, and it is having a slight little benefit to Tesla as well. Tesla's stock is up 0.1%. Now, this video is actually less going to be about the AI bubble that we currently have in our markets and more about what's coming next for Tesla stock. You see all kinds of crazy things going on here on the charts. We're going to break it down. What are the charts saying about Tesla stock? Where could we be going next? Today could have marked a major turning point for Tesla stock, at least in the near term. Whether or not our markets can hold up from here without going through a major correction event is yet to be seen. If that were to happen, I would expect Tesla stock to fall. But no crash, no major correction, and I think Tesla has a long way of upside from here. Two specific catalysts that look like they are coming right around the corner that could amplify this effect on Tesla stock and push you back into the 200s. We will also go over the final option activity in Tesla stock today from hedge funds and institutions. Last but not least, we have some economic data coming out tomorrow and another day filled with Fed speakers. I'll give you the calendar and what you need to know. So first things first, let's actually start with this because we're just going to cover this for a minute, maybe 2 minutes, and move on to everything Tesla. But ARM soars 39% after the chip designer gives strong forecast, says AI is increasing sales. Now, they did have really good earnings. EPS came in at 29 cents versus 25 cents. Revenue at $824 million versus $761 million that was expected. But it was really the guidance that is causing the stock to rally. By the time you're watching this video, probably 20 to 40%. It says they expect earnings per share for the fiscal fourth quarter between 28 cents and 32 cents on sales of 850 to 900 million. Analysts were expecting 21 cents, so that was a raise on EPS, and sales of 780 million. So even on the low side, ARM just guided for 70 million higher. On the high side, ARM guided for about 120 million higher. So that was roughly a guide up of about 15-ish% higher than analyst expectations. Now, ARM stock is trading with a PE ratio of 429 and a forward PE of about 71. Just for context, Tesla's PE ratio is more than 10x smaller at 39.73. This is actually a decrease of 36% from the average of 62.1 over the past 4 quarters. So although these were good earnings and it was a really good guide up, is a 40% move justified? I don't know. You let me know down below in the comment section. Is this a bubble? Are we too far over our skis in the near term with AI and chip stocks, or does this have further to go? I mean, I believe in AI probably more than most, and yeah, it's getting a little insane, especially because the other parts of the markets are not playing along at all. Tesla, not playing along. PayPal reported earnings today. They're definitely not playing along. PayPal posted a fourth quarter adjusted profit of $1.48 a share for the 3 months ending December 31st. Analysts on average had expected $1.36 per share. Revenue rose 9% to $8 billion in the quarter on a currency neutral basis, also beating expectations of $7.87 billion. Total payments volume increased 13% on an FX neutral basis to $409.8 billion in the fourth quarter, beating street expectations of $404.45 billion. Yet, PayPal doesn't really have anything to do with chips or AI at all, and the stock's down 5% in after hours. Trading at only 11 times this year's earnings, PayPal's about 40 times cheaper than ARM. But hey, I don't know. Let me know what you think down below in the comment section. Is this a bubble or is this not? Nonetheless, Tesla stock is benefiting at least a little bit here in after hours. Tesla is up about 0.2% after the bell. So I covered this catalyst in the last video, so we'll do it here briefly, but I do think this is likely coming here. Tesla needs to boost EPS. They need to become a little bit more profitable. So Tesla asks which jobs are critical, stoking layoff fears. Now, it's really going to depend how much of their staff's let off. Like a 1% reduction in staff, that's not going to boost EPS that much, if any. 5%, 10%, 15%, that boosts EPS a lot, and that will push Tesla stock higher. And it should do so pretty much instantaneously. The second big catalyst for Tesla stock is really something nobody on Wall Street sees coming, but it's right in our face. Now, this could take a couple of months, potentially, although it could happen tomorrow or really any time. This article says Tesla China rolls out enhanced autopilot free trial and discounts to celebrate the new year. Tesla has actually been planning on introducing FSD in China for almost a year now that we know of. Now, they started back in August doing about 30 different cars and testing FSD in the country. And then as of November of 2023, I should say that was August of 2023, so a couple months later in November, Tesla is reportedly planning to introduce its full self-driving suite in China. That's the news we got just a couple of months later. We didn't hear much about that after. We thought that it would come in January. January came and went. Now it's February. Could it come in the month of February? Of course. Could it come later? Of course. But at some point in 2024, it's highly likely that FSD will enter the Chinese market. Now, the fact that enhanced autopilot is being offered in China, I think is a really good step in the right direction that shows on a regulatory front, Tesla should be able to launch FSD soon, if not really any time now. I think it's also fair to say that the Chinese culture is very tech savvy for those individuals that live in the city that are a part of, modern day culture. If you go to like North China or like mountainous China, then, it's not all super developed and it's not all into, huge technologies, but the majority of the population is. And if you're buying a Tesla, which is already a premium product, I think a lot of people are going to opt to get FSD, which FSD is going to be a lot cheaper, but it will boost the average selling price. That's how Tesla calculates it, and just the total automotive revenues, then that should help Tesla's numbers quite a bit. We believe that FSD is about 90% profit. If you take out the, cameras that are involved, that's roughly around 10%. Could it be a little bit more, including running the data center storage or data centers in China? Sure, if you factor in everything, you're probably looking at 75-80% net profit. And so that would help quite a bit boost the EPS, in my personal opinion. China, as of last quarter, sold more vehicles than the US, so this should be some good news. And honestly, I believe right now it could be really good news for Tesla stock. Tesla stock needs some good news, and I believe this could cause Tesla stock to rally 10, 15%, 20% over the course of just a couple of days. I also do think Tesla announcing a 5 to 10% staff reduction would also boost Tesla stock anywhere from 10 to 15% over the course of just a couple of days, potentially even more than that though. It would show for the first time ever that Tesla is really trying to become more profitable. I shouldn't say the first time ever. I should say the first time in like 2 years, where Tesla has been prioritizing volumes instead of being profitable. Maybe it is time now to focus on profitability, and shareholders would love that. So if Wall Street currently expects about $4.43 for 2025 EPS, and the historical average is around 62, then you could be looking at Tesla stock at about 275 in a relatively short amount of time. Now, I would go somewhere in the middle there, right? I would say maybe $4 of EPS, times 62. That would put Tesla stock at about 248, and I think that is reasonable if these two catalysts do actually come to happen, or even if Tesla just lays off 5 to 10% of their staff. I think you could get a move back to these similar levels just based on a boost to EPS. Then, not to mention what investors would do or how many people would go and buy Tesla stock, because it looks like Tesla is now focusing on becoming more profitable. Just that in and of itself, showing the initiative to change things, is a lot. Tesla option activity came in very strong today from hedge fund and institutional investors. You had 1,042 orders today, totaling $1.86 billion and a positive order value of 63%, which yesterday's positive order value was 38, and over the past week you have had a positive order value of 49%, so considerably higher than yesterday, well, way higher than yesterday, and decently higher than the average of the last week. As I mentioned in the last video, it does look like shorting activities have also died down a little bit in Tesla stock, with cost to borrow fees back down to about 1%. Now, if we take a look at the chart of Tesla, you can see that the stock's gotten beaten down. That's clear. But I do have the Bollinger Bands pulled up here, and this is BOLL if you guys want to look this for yourselves. But what it is basically on the low side is where you tend to find a lot of support for a stock. On the high side is where you tend to find some resistance. And it tends to work out pretty well. I mean, almost every single time you touch the high end, you come down. Every time you touch the low end, you tend to bounce. Now, it's actually the middle line that is very important right now, because stocks tend to revert back to the middle line, which is about the 20-day moving average or so. This lower end line is about the 2-day moving average. And you do tend to make your way back to the blue line basically every single time. Or like you've seen during this period of time from November through December 28th, that tends to be some support if you're above it. But if you're below it, you tend to revert back to that line pretty shortly, right? You don't tend to stay under that line for too long. Well, you actually have from January 3rd until now. You've been well under this blue line here. Now, this blue line is currently at $201.58 per share. So arbitrarily looking at this says, hey, we could probably get back to about $200 per share pretty easily. That would be a rise of about $13 from here. The other thing, though, is your RSI has been negative since January 17th. Under 30, like really, really bad. The sentiment has been terrible in Tesla. Now you just went back above 30 again today. Typically, if you are a trader, you know this. If the RSI is oversold and goes positive, when it goes positive is typically a good time to take out a long trade on the stock. Tesla historically goes through very large bounces if it ever gets under 30. Typically, it's for a brief moment in time, but I mean, you've been under 30 longer than you were even back here when Elon was selling stock. So the sentiment is very washed out at this current moment in time. I'm not going to sit here and forecast a 30 to 40% rally from here, but I don't think a 15-20% rally is egregious at all. A 15% rally from here would put Tesla stock at about 216, and a 20% rally from here would put Tesla stock back at about 225. Now, do we get there for no reason? Obviously not. But I do think if any one of these catalysts happen, that it'll probably push us back to about 220. Just call it roughly under 20%. After all, there's been more fear than anything that has pushed Tesla lower. Tesla, I mean, they didn't provide guidance for 2024, but is that really justifying Tesla being the worst performing stock in the S&P 500? And yes, I get it. Tesla has cut prices in a couple countries since the start of 2024, but it's not a big deal. Margin expectations really have not went lower since earnings, at least from Wall Street. The only difference is people are willing to pay less for Tesla stock today, which I don't see any justifiable reason for that. In all reality, Tesla just had the best January it's ever had in Europe, and it looks like, 2024, the first 5 weeks of the year, you're up over 20% on a year-over-year basis for Tesla delivery numbers out of China. This all comes at the same time that you have AI stocks going bonkers, and Tesla is the most practical real-world AI that there is. I think inevitably the markets start to understand that. When that happens, I think that's longer down the line, but I think it will happen nonetheless. You can also see the MACD line. This yellow line is starting to break above the blue line, and when that happens, that's also another pretty dang good indicator that the stock is about to, take a turn for the better. Ever since December 28th, it's been pretty much straight down consistently for Tesla. Morgan Stanley writes today, EV demand is decelerating. Suppliers are cutting backlogs, fleets are cutting, and some consumers are moving back to ICE/hybrid vehicles. OEMs are being rewarded for pulling back on EV spend. It's become fashionable to be an EV bear. But at the same time, 3 out of every 5 US consumers, are thinking about buying an EV. Now, the biggest problem with my theory is, the markets are pretty hypey right now. The markets are pushing up to all-time highs, which you hit another one of those today, but you're also pushing up to 500 on the SPY and 5,000 on the actual S&P 500, which you could get some short-term resistance around. Then again, you could make the argument that if the top 10 biggest names are really pushing us to all-time highs, at the same time your average stock is actually declining by quite a lot, that maybe if the markets fall and those big tech names see some profit taking, maybe your average stock can start to do well. Now, Tesla used to be grouped in the Magnificent Seven camp. Now apparently people want to throw it out. And it seems like Tesla is now grouped into the interest rate sensitive dog stocks that nobody wants to own. Now, eventually those dog stocks will really start to outperform. Question is, when do markets start to price in the first Fed rate cuts, and when does that capital start to shift? Let's be honest. Tesla is trading at pretty much the same valuation as a Microsoft, but is growing last year at 3 times the rate that Microsoft is growing at. But Tesla, in the market's perspective, does not offer real-world use cases for AI, which I think that sounds crazy. Which company is more AI-related, Microsoft or Tesla? Can Microsoft give you a product with AI that really improves your life? I know some people like Copilot with AI, Excel, but is that like driving your car for you? There's some use factors there to Copilot. Some people love it, but I think to make the comparison that, Microsoft has more AI use cases than Tesla makes no sense at all. See, and when you say all of these things out loud, you just really sit back. Like, what in the heck is broken right now in our markets? Even with something like a PayPal. PayPal is trading at 11 times this year's earnings, like 9 times next year's earnings. That is half of the valuation of the S&P 500. And it just grew revenue by about 9%, almost 10%. In this last quarter, but yet nobody wants to own the stock. I do think inevitably this is a risk for Tesla and for the broader markets. Broader markets are in a very weak position, being as top heavy as they are, and if you do see some downside there in the broad markets, I would think you would see some downside in Tesla stock as well. I do think the downside would be more limited, and I do think 180, especially over the past week or so, 2 weeks or so, has shown that it is a solid level of support. Indeed, you actually have not gotten a close under 180 at all since Tesla reported their earnings. Tesla's fallen to 175 2 days in a row intraday, but you've always closed higher than 180. So I continue to believe that is a short-term bottom on Tesla. I think you're getting some support in there. And I do think if we get weakness in the markets, your downside very limited here around 170. If you went through a larger crash-like event, I think you'd really have to see some really bad economic data, some really hot inflation reports, something dramatic would have to happen. A U.S. war in the Middle East, something along those lines. And then you could see Tesla stock fall back to the 160s or 150s. Mix that with a price cut in the U.S. or China. I could definitely see how that could happen. But I think at this point, if Tesla's considering laying off their staff, I think the price cuts are pretty much behind us. And I think that's also a pretty safe assumption to make. But I do think we still could get price reductions on the higher end variants of Tesla products. The Model S, the Model X, not the Cybertruck anytime soon, but eventually the Cybertruck as well. Anything that's priced, on the higher side, even your Model 3 long range performance versions when they come out, your same, Model 3, Model Y performance, kind of group both of those in the same category. Those could see some price reductions or the long range variants, but not your mass market, your lower end Model 3s or Model Ys. I think the price cuts are done there. Thus, I don't think that's going to affect Tesla stock anymore. And again, kind of to all of these points, GM and Ford have raised guidance big time. Toyota has done very well, raised guidance for 2024. All of those stocks have done very well as a consequence of that. Tesla does not provide guidance, didn't lower guidance, didn't raise guidance, just didn't provide any. And Tesla stock has gotten absolutely punished. I don't know what world we live in where we believe Toyota, Ford, and GM are going to have better numbers than Tesla. If anything, they could have comparable numbers to Ford, GM, or Toyota, but not worse numbers. That doesn't make a whole lot of sense to me. What? So GM, Ford, Toyota are going to do very well in 2024 and Tesla is not? Just saying that out loud sounds asinine. I actually want to punch myself in the face saying that out loud. So those are some of my generalized thoughts around Tesla. I think at this point, it really doesn't make a whole lot of sense that Tesla really is not participating in this market that is hitting all-time highs when Tesla is directly related to AI, if not the highest use case for AI in the world. Tesla's trading at almost a record low valuation. The only time we were lower on a valuation basis was that brief period that Elon was selling stock to buy Twitter. That's it. And you were pretty close to where we are now. Tesla did not issue guidance, but they also did not lower guidance. Tesla introducing FSD into China, presumably here in the short term, about to lay off a percentage of their staff. We don't know what that number is, but we know that's going to be good for Tesla's profitability. Ford, GM, and Toyota expect to have really good 2024s, but Wall Street has already counted Tesla out. I think all of these things set us up for some big upward surprises in 2024, let alone FSD licensing deals, if that were to happen. Better than expected progress on Optimus, on actually bringing robotaxis to existence. Lots of different catalysts that Wall Street is just not considering. And I do think in the near term, based on some technical factors like the RSI and the MACD and the Bollinger Bands, we're likely to see at least a roughly $15 rally or so to the upside, but could go much higher than that depending on the specifics of Tesla's layoff efforts. Let me know what you think down below in the comment section. As for tomorrow, Thursday, February 8th, we are going to get some data overnight out of Europe, some inflation rates out of Italy, some data out of Japan as well, but nothing too major. 8:30 in the morning, we will hear from Fed Barkin. She will be speaking. Probably what's going to move our markets coming first thing in the morning. The Fed has basically been saying the same thing, that they're going to be cutting rates, but they don't know how much. Some sound more dovish than others, but they're all on the same page. They all plan to cut rates in 2024, and I think that's the more important part. It's about what's coming next, and what's coming next are rate cuts. Tomorrow at 8:30 in the morning, we will also get initial jobless claims. Now, for anyone that's a bear out there that thinks the U.S. economy is heading into recession, I don't know where the data comes from to support that thesis besides historical trends like the 10-2-year yield curve inversion, some anecdotal things that may not even apply to an economy that gets trillions of dollars pumped into it. This is really a first for the U.S. economy. We've never went through anything like this. So, if you are a bear and you think we're going into recession, I'll be clear, I don't. But if you do, You want to watch initial jobless claims coming out tomorrow morning. Last week was 224,000. This week, you're expecting 220,000 weekly claims. If we are to see weakness in the labor market, this is the first place, and I mean the first place that you will notice it, because you'll start to see a 260,000 job number, maybe a 300,000 job number. This is the first thing Wall Street will see and say, yeah, the labor market's weakening. At that point, that could even be bullish for our markets until it isn't anymore, because that would mean more Fed rate cuts. So careful what you wish for, because a hotter number there on initial jobless claims for the week could actually be a positive for our markets. 10 o'clock in the morning tomorrow, you are going to get wholesale inventories month over month, expecting positive 0.4%. This will have a role to play in the GDP Now tracker from the Atlanta Fed that is currently at 3.4%. Inventories do play quite a large role in GDP, so definitely want to be watching for that. And then Fed Barkin will speak at 12:05 in the afternoon. I believe you'll get some other Fed speakers as well, but I don't see them here on this calendar. So nonetheless, Fed Barkin speaking twice, and initial jobless claims, wholesale inventories, those are going to be your important things. You're also going to get a 30-year bond auction. If that auction comes in with good demand or bad demand, that will also move markets. Tomorrow after hours, you will get Affirm, Pinterest, Cloudflare, Dexcom, Expedia, Bill.com, Take-Two Interactive, Illumina, and PetMeds that will be reporting earnings. And then Friday morning, Pepsi, Canopy Growth, and some other names that you guys probably don't know or have not invested in. Let me know what you think about all of this information. Hit the like button as well as subscribe to the channel if you guys want to come trade with us live in real time every time we make trades. Check out that link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.